Welcome back to the deep dive. It is Tuesday, January 2026. And if you've even glanced at a market heat map today, you've seen it. The healthcare and biotech sectors they're not just green, they're practically radioactive.
Oh, absolutely. It is one of those days where, if you're in the right stocks, you're having a career year in about 6 hours.
Mhm.
But if you're not, you're just wondering where all the noise is coming from.
So that's our mission today. We're going to do a deep dive, a proper journalistic report on what's happening. We pulled the top three performers from our screener. We've got Corvus Pharmaceuticals, Aclaris Therapeutics, and RAPT Therapeutics.
And we want to break down not just what happened, but why. We're looking at, a clinical breakout, what looks like a sympathy play, and then a full-on strategic buyout. Three very different stories.
And we'll run the paper money math, see what those gains actually look like. But before we get into these, frankly, ridiculous numbers, we have to do the usual.
Right. Just a quick reminder for everyone, this is all for informational and entertainment purposes. We're reporting on the data impartially. This is not, and I repeat, not financial or investment advice. Always do your own research.
Okay, ground rules set. Let's get to it. We have to start with the leader of the pack, the one causing all the noise. Corvus Pharmaceuticals, ticker CRVS.
This is the headline story. So CRVS closed today at $21.41.
Okay. And where was it yesterday?
Yesterday, it was just over $8, so that's a gain of $13.36. In percentage terms, that is, 165.96%.
In a single day.
In a single day. And get this, it's a 9-year high for the stock. They haven't seen this level in almost a decade. It's a total repricing of the company.
A stock doesn't do that in a vacuum. What was the catalyst? What happened?
It was the magic words in biotech, clinical data. Corvus released positive safety and efficacy data from cohort 4 of their phase 1 trial. The drug is called soquelitinib.
Okay, cohort 4. Just for our listeners, in phase 1, that means they've been successfully upping the dose, right?
Exactly. You start low, you check for safety, you go to the next cohort with a higher dose. To get positive efficacy data from cohort 4, that's the sweet spot. It means the drug seems to be working and it's not toxic at that effective dose.
The Goldilocks zone. And what's the target? What are they treating?
Moderate to severe atopic dermatitis.
Eczema.
Yep, most people just know it as eczema.
You know, some people hear eczema and just think it's an itchy skin cream. But this market is huge, isn't it?
It's massive. This isn't just dry skin, it's a debilitating autoimmune condition. The market for effective treatments is in the multi-billions. That's why the stock reacted like it did, and now they're planning to start phase 2 in Q1 of this year.
Okay, so amazing news. But then they did something that always confuses people. The stock moons, and then bam, they announce a $150 million public offering of new shares. So I'm a shareholder, I'm celebrating, and then the company says they're going to print more shares and dilute me. Why do that right now?
I know it feels like a gut punch, but it's actually the smartest thing they could do. Look, phase 2 and 3 trials cost a fortune. They need cash. If they raised that money yesterday at $8 a share, they'd have to sell almost 19 million shares.
Which would crush the price.
It would huge dilution. But today, at $21 a share, they only need to sell around 7 million shares to get the same 150 million. They're striking while the iron's hot, minimizing the damage to get the funding they need.
But okay, that makes a lot more sense. What about the company's actual health? What do the financials say?
Well, the market cap just jumped to $1.6 billion, but if you're looking for profits, you won't find them. The EPS, earnings per share, is negative 53 cents.
So they're losing money. No PE ratio.
No E in the PE, correct. But the balance sheet is clean, very low debt. They aren't drowning. They're just, burning cash on R&D, which is the biotech way.
And are the big institutions in on this?
They are. About 38% institutional ownership. So it's not just a retail meme stock.
All right, let's talk technicals. The chart is obviously a vertical line, but what are the indicators screaming at us?
They are screaming overheated. We look at the RSI, the relative strength index. Anything over 70 is considered overbought.
And where's CRVS?
It's at 90.98.
90. I don't think I've ever seen an RSI that high.
It's stratospheric. It suggests buyer exhaustion could be right around the corner. The stock is also trading, 170% above its 20-day moving average. Price tends to pull back eventually.
What about the volume?
Huge. 83 million shares traded. Their average is about 1.3 million.
It's like 60 times normal. Okay,
Yeah.
So the news was the buy trigger, obviously. But an RSI of 90 plus a new stock offering, that sounds like a sell trigger, is flashing for short-term traders.
It's a classic battle. The news is the long-term story, but the technicals and the dilution are the short-term hurdles.
Okay, let's make this real. Our paper money math challenge. Say you had $5,000 and a bit of luck yesterday.
Let's run the numbers. Yesterday's close was $8.05.
So $5,000 gets you.
About 621 shares.
And then you wake up, the market closes today at 21.41. What's that account worth?
Your $5,000 is now worth $13,295.
For a one-day profit of $8,295.
That's the biotech lottery right there.
Yeah.
But remember, it can go the other way just as fast.
Of course. Okay, so that's the leader. But when a tide like this comes in, it lifts a lot of boats. That brings us to stock number 2, Aclaris Therapeutics, ticker ACRS.
Right. Aclaris is what we'd call a sympathy play, mostly. It closed at $4.43, up about 69% on the day.
69% is still a monster day. Why the pop? Was it just drafting off Corvus?
It's a bit of both. Aclaris did have its own recent news. They initiated a phase 1b trial for their drug, ATI-052.
Let me guess what it treats. Eczema.
You got it. Atopic dermatitis. And that's the connection. Investors see Corvus have success. They go, who else is in this space? And they find Aclaris. A win for one de-risks the science for the other,
So the sector gets re-rated.
Exactly. Plus, Aclaris was just added to the NASDAQ Biotechnology Index, the MBI, which creates forced buying from index funds.
Okay, let's look under the hood. Corvus was unprofitable, but had a clean balance sheet. How does Aclaris stack up?
Frankly, the financials here are a lot uglier. The market cap's smaller, about $480 million.
Yeah.
But the margins,
How bad?
the operational margin is negative 416%.
Yeah.
And the profit margin is, well, it's negative 900%.
Wait, what? Negative 900?
Yes.
So for every dollar they bring in, they're spending $9.
That's a rough way to look at it, yes.
Yeah.
It just shows the insane cash burn these companies have. Their EPS is negative $1.38, so they're losing more per share than Corvus.
Wow. That feels way riskier. Was there any short interest here?
A little bit. About 4.7% of the float was short. So when the stock pops 60%, some of those shorts have to buy back their shares to stop the bleeding, which just adds more fuel to the fire.
And the technicals, is it as hot as Corvus?
It's hot, but not, nuclear hot. The RSI is high, 79.57, so definitely overbought, but not at that crazy 90 level. Volatility is very high, though.
All right, paper money math time. Did the sympathy play pay off as well?
Let's see. Yesterday's close was $2.62. You put in your $5,000.
Cheaper stock, so you get more shares.
A lot more. You get about 1,908 shares.
And today closes at $4.43.
Your investment is now worth $8,452.
A profit of $3,452.
Which is a fantastic return, don't get me wrong. But it's almost $5,000 less profit than you made on Corvus. It just shows you the market pays a premium for being the leader with the actual news.
That's a perfect lead-in to our third and final stock. We've had the breakout, we've had the sympathy play. Now for the big exit. This is RAPT Therapeutics, ticker RAPT.
This is the dream scenario for a biotech investor. RAPT closed at $57.57, up 64%.
The chart on this one looks totally different, though. It just jumped up and then flatlined. Why?
Because the guessing game is over. The news here is that GSK GlaxoSmithKline formally launched a tender offer to acquire RAPT.
A tender offer, so basically a buyout.
An all-cash deal.
Yeah.
GSK is saying to every shareholder, we will pay you $58 cash for every single share you own. It's a done deal, pending approvals.
Okay, so the offer is $58. The stock closed at $57. Why isn't it trading at exactly $58?
That little 43-cent gap, that's the time value of money and the tiny, tiny risk that the deal somehow fails. Arbitrage traders buy the stock now to collect those last few pennies when the deal officially closes. For us, it's basically locked in.
What's the total price tag on the deal?
$2.2 billion. GSK expects it to close this quarter.
And is this another eczema play?
Close. It's under that same immunology umbrella, but GSK is buying RAPT for their food allergy treatments. It's a strategic move to build out their portfolio.
I have to ask, what did RAPT's financials look like before the buyout? Were they profitable?
Not even close. In fact, they were the worst of the three. Their EPS was negative $11.07.
Negative $11 a share.
A deep, deep hole. But this is the crucial lesson. In a buyout, none of that matters. GSK isn't buying last year's earnings report. They're buying the future revenue from a patented drug. They're buying the science, not the balance sheet.
So the technical analysis here is pretty much moot, I assume.
Totally. The RSI is at 80, but it's irrelevant. The price is tied to a legal contract, not market momentum. The only buy trigger left is for the arbitrage guys.
Okay, let's run the math one last time. $5,000 into RAPT yesterday.
All right. Yesterday's close was $35.10. Your $5,000 gets you about 142 shares.
And today, with the buyout news, it's worth
$8,175.
a profit of $3,175.
And what's really interesting is that's almost the exact same profit as the Aclaris sympathy play.
That is fascinating. The safe, guaranteed buyout gave you the same return as the riskier sympathy bet. But the big winner, by far, was Corvus, the one with the actual data.
It maps the risk-reward curve perfectly. Corvus could have gone to zero if the trial failed. RAPT's upside was capped by the cash offer.
So to wrap this all up, what's the big picture from today?
The big picture is that immunology and dermatology are on fire right now. But it's so important to know what you own. Corvus is a pure clinical stage bet. Aclaris is momentum and correlation trade. And RAPT is now just a cash equivalent.
And I just have to point out again, all three of these companies have massive negative earnings, yet we're talking about billions in valuation. It's all about the potential.
It is. But that technical warning stands. All three have RSIs over 79. Chasing these stocks tomorrow morning is a very different proposition. The easy money, that initial pop, has been made.
The buy trigger was yesterday's close. The sell trigger is today's RSI.
You've got it. You're buying into a wall of resistance now.
All right, before we go, leave us with the final thought. If someone missed this whole move, what should they be thinking about?
I'd be thinking about sector rotation. Billions of dollars just flooded into atopic dermatitis. The spotlight is on. So the question to ask is, who else is in this space? Which other small-cap biotechs have similar drugs in their pipeline but are still sitting at their 52-week lows, completely ignored?
Because the money will eventually look for the next thing.
It almost always does.
Yeah.
Go find the companies playing the same game that haven't popped yet. That's where the next opportunity is often hiding.
A billion-dollar question for everyone to research tonight. That's our deep dive. Thanks for listening, and we will catch you on the next one.